So you're now in a position where you've done the research on the mortgage, you've checked the affordability, you pretty much know where you want to go with it. The next step in the process is to obtain a quotation and to make sure that the monthly payments stack up. So this video is to show you my 7 key points on what to check when obtaining a mortgage quotation. Welcome to Mortgage Monday. So this week I'm going to walk you through a mortgage quotation and show you my 7 key points to check when going through the quote. Now the reason why it's so important to obtain a quotation is to make sure that you're comfortable with the mortgage payments. It will also show you the mortgage deal after it ends as well, and you can just make sure that as a whole it is right for you. So what I'll show you now is a step-by-step process on going through a mortgage quotation. At the end of the video I'll summarise the 7 key points to check so you know where to look. So once you get a quotation from a mortgage provider, you will notice it's about 7, 8, 9 pages long, and there are a lot of wording in there that you may not fully understand. So I'll talk you through the quotation itself and show you what every step means so you can understand it properly. So once you get a mortgage quotation through from a provider, it should look a little bit something like this. So I'm going to talk you through the quotation itself and show you the key points on what to check. So the first point is to check the amount of the loan you're looking for. So as in the previous video on affordability, we're going to do a mortgage of £300,000. This section will also show you any fees that may be added to the loan as well. So in this instance, we've got an arrangement fee with the lender of £995, and it states there that it will be added to the loan. Down from here, you've then got the duration of the loan. Again, in last week's video, we looked at a 25-year term, so that matches up there nicely. Further down from here, you've then got the deal itself, so it will tell you the interest rate of the mortgage you're applying for and also when the deal ends as well. So in this example, it says the mortgage is there until the 31st of October 2021. So in effect, it's a 2-year fixed rate deal. Be wary of that though, the deal may be slightly longer or slightly less than 2 years, so make sure you're happy with the end date of the product firstly and foremost. What it will also show you then, down from there, is what the rate will go to once that current deal ends, and it's making sure again you're comfortable with that figure there. A little bit further down, it tells you the total amount to be reimbursed. Further down from there, you've then got the total amount to be reimbursed. So this assumes that this mortgage will not change throughout the duration of the mortgage. It assumes the 2-year fixed rate and then the 23 years on the standard variable rate. So this is what this figure is made up of here. So on to the next page then. Section 4 is a really important part to take notice of. So what it shows you is the APRC, which is the annual percentage rate of charge, and this is the figure to go off. So in this instance it's 3.82%. If you're getting various quotations, that's the one to consider and to compare the overall costs over the next 25 years. So on this page you've also got the fees section as well. So this will tell you the costs involved to take this mortgage out. In this instance, we've got a remittance fee of £30. That's an admin charge. Most lenders have it, and it's simply to transfer the money from the lender to the solicitor on completion. Arrangement fee of £995. So lenders will have products with fees and without fees. And if you are using a broker, they will be checking, is it worth your while paying an arrangement fee? Will you make that £1,000, £1,500 back over the next 2, 3, 5 years, whatever deal you go into? In this instance as well, we've got a valuation fee. In this quotation here, it's a free of charge incentive from the lender to take the mortgage to them. So also on this page, you have a worst case scenario and interest rates. So what these quotations have to do now is tell you what the highest interest rate has been over the last 20 years. So in this instance, we've got one at 10.99%. So if that's the case, the annual percentage rate of charge could be 11.61%. So it's not to scare you, it's just to show you that it has been that high before, it may happen again, fingers crossed it won't. So next page of the quotation, we've got sections 5 and section 6. This is telling you all about the monthly payments whilst you're in the fixed rate and also when the deal ends. So again, you can check the payment when you're in the fixed rate, make sure you're comfortable with it. What it will also show you, as I mentioned a minute ago, if rates rose to a certain level, it also tells you worst case scenario as well. So just be wary of that as well. Section 7 of the quotation is then an illustrative repayment table. What this basically is showing you the impact of your monthly payments, what you're paying the interest, what you're paying capital, and it shows how your balance will reduce month on month and then year on year once the deal ends. So in this example, it shows after the 2-year fixed rate, if you had taken a 2-year fixed rate, borrowing £300,000, at the end of year 2, your mortgage balance will be down to £280,597.73. Section 8 of the quotation is additional obligations. So with a mortgage company, they will always tell you if you are obliged to take any further products out with them. Most lenders don't, to be honest, but at the bottom here, one thing you must have with a mortgage is building insurance. It's a legal requirement. As it states here, most lenders won't insist on taking their own insurance. As long as you've got it and you can prove it, that will do for them. Section 10 of the quotation is all around flexible features, and it will tell you what you can do whilst that mortgage is in place. So a typical one that will be included is what's called portability. So if you have a mortgage on a 2-year fixed rate and you come to want to move house within that 2-year fixed rate, what a lender will allow you to do, generally speaking, is take that mortgage with you and take it to the new property, and you won't have any penalties to pay on that. What lenders will also do as well whilst you're in a fixed rate is generally offer an overpayment feature as well. Typically you can overpay 10% of your balance per year, whether that's a big lump sum, regular overpayments, however you see fit, you can reduce your mortgage down that way there. So in the first year in this example, if you've got a £300,000 mortgage, you can overpay 30 grand of the mortgage penalty free. It's a really good way to reduce your interest down, reduce your balance quicker, and it will also reduce your term as well. Incentives on here as well, so if there's any incentives from the lender as part of the mortgage deal, in this instance we've got a free mortgage valuation and also a free legal package to take the mortgage from your current provider to the new lender as well. So the 7 key points you want to be checking are: number 1, the amount of the loan. Does it match up with what you are looking to borrow? Number 2, the APRC. This figure, again, it can compare, so if you've got multiple quotations, use that figure to get a true comparison of the overall cost involved. Number 3 is the fees involved with the mortgage. So are they paid up front? Are they added to the loan? Be wary, if you are adding fees to the mortgage, you will also pay interest on that fee for the duration of the mortgage as well. Number 4 is the monthly payments of the mortgage, so make sure you're checking the payments of the mortgage now and also after the deal ends. Number 5 is additional obligations. So again, just make sure that you don't have to take any other products with the lender in question. Number 6 is early repayment charges. So if you're planning on making big lump sums to the mortgage within the fixed rate period, again, just make sure that you're comfortable with the penalties that may arise from that. And number 7 is to check the flexible features of the mortgage as well. So if you move in house, can you move the mortgage with you? What are the overpayment facilities? So those are the 7 key points to check when going through your mortgage quotation. So thanks for joining me again on Mortgage Monday. I hope you found those tips useful when checking a mortgage quotation. If you would like a guide on what to check as important points, comment below with the word quote and I'll send you across my free guide. Again, thanks for joining me. You can follow me on LinkedIn, you can subscribe to the YouTube channel, and I'll see you next week for Mortgage Monday.